All right, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Let's go ahead and take a look into the charts, each and every one of you. Thank you for coming on in. Let's check it out. All right, so BTC has been trapped in this little pitch fan that we've had up for, God knows it's been at least since this point, so 2 months now. When it was caught in this ascending channel, we were catching this rise up on these fib levels on the pitch fan. How do you instantiate a pitch fan? Well, you can go to your fib retracement tools and go down to pitch fan, and it requires 3 clicks. You do a kind of rise or fall and then a retrace idea, and it will put you in these mean reversion paths with which you can set the values of using the settings. You can set the 236, the mean, the median, and the 382 and all these path. So we were seeing this rise and drop, and that gave us a idea for where price could be trapped, and it's been following that quite nicely since January 14th. So these ascending channels often follow these diagonal fibs in a strange fashion. So we're watching how the outskirts of the 1 and the 706 region have been following this for the last 6 days, and we closed the candle just recently above the 706, which is kind of bullish in terms of going up to the upside here on BTC. If we go to, we'll look at the indicators in a bit. So we're going to first go into the liquidity of the heat map. What is the heat map? Well, it's when people put their liquidity in the charts to get burnt to a crisp by the market maker, and they leave it there unbeknownst to them without realizing it's completely visible for the people to see where it's getting taken. 2 days ago on my live stream on YouTube, you can just Google my name to find it, we're going over this idea of this $303 million at 27K, and they went down right to it and bounced to a T off that liquidity right here, 27 even, and they came down to that guy, popped his account, and bounced off of their liquidity. So this is what the definition of a liquidity grab is. This is high block capital. It's about $70 a month to have a subscription to this, where you can see where the imbalance lies. So this is the 1 minute time frame, and we have $9.8 billion in short liquidity imbalance to the upside. And as you see below here in the immediate down to 27.1, there is not really many pools of liquidity here for longs. However, there are some shorts up above and getting stacked. So we put out the idea last night about this going up and potentially coming down. Some long liquidity entered off of the breakout. This is why breakout trading is not a good strategy. As you see here, they broke out. Somebody went long at this point at 27.7. They created an imbalance here of $117 million in long liquidity, and they came back and gobbled that up, and then went back in their merry way to the upside. So you have to keep an eye on where these pools exist above or below price, and where that imbalance could be induced to being a target. So it looks like the target for me is upwards in 28.4 or 29K, 29.1. Seems to be a nice caked region of 25 and 50x, folks, just above the highs. Of course, you do have some down below here at 26.4 and below, but we'll get into why that doesn't interest me as much as we go into the other time frames. What are the other time frames? Well, the 12-hour here just shows you what's induced in the last 12 hours. It's always pretty even Steven, so I just skip it and go to the 7-day. Once again, thank you for coming on in to the live. So let's take a look. Up here at 29K, we have 4 billion, nearly 5 billion, 5 billion, 5 billion. That's about 20 billion. about $27 billion up in the 29.2 region, and down below you do have some nice one to about 10 billion in total from 27 to 26.2, but the imbalance is in the immediate is located at 29k as we suggested earlier. And yeah, as we go to the different time frames, you enter between internal to external liquidity, so the pools shift and morph and change as you extend your look back to higher time frames. So on the monthly time frame, you're starting to see this caked up region down at 22.5 and below, so this is starting to get thicker from before, although you're still getting this region up here at 29k, and you're also getting this inducement of liquidity above 30k, which was not there previously. So last week we didn't see that zone at 30,700, now starting to get some caked up liquidity. As we go to the 3-month, there's an imbalance up above as we step into the external liquidity pools, and we see these paths to 30k still being a valid idea, as you still get pools starting to form beneath here, and you have the lucky campers sub 20k that are resting nicely in a big gap in price. So as they start to cake up this long liquidity down here, as this gets thicker and they start knocking out these pools, the imbalance starts to form for the narrative to shift and start heading back this direction. This is why you should always pay yourselves and trim as you go and put your stop loss into profit. Not financial advice, of course, but for your paper traders out there. Let's go to the 6 months. So you got 29k, you got $50 billion starting to pool up here. Previously on March 12th, there was only 9 billion. So this is getting thicker in so many days. And same with the 29.4 region, you're now up to 46. Not nearly as much induced there as at 29.100, but interesting to note nonetheless. So you're still seeing these pools as valid targets. Once they get above the 30k region, it starts to get sparse as of this moment. So then these start to becoming targets. Let's see if the yearly is still glitching out. It was glitching out last night. Oh no, it's good. So we're seeing that this nearly 100 billion at 29.2 is a valid target, which is why I was saying I was more interested in the long idea, because this 100 billion could be knocked out as it was induced from 60 up to nearly 100. So $40 billion has been induced here at 29.2, and you see some below, but not nearly on the same level as what's immediately available here. So I find it hard to believe they would not leave that taken on the yearly time frame. Now this yearly time frame has trades of pools going all the way back to June and May of 2022. So these pools obviously get thicker than lower time frames because you're looking back into shorts that have been open since then. This is the idea of internal versus external liquidity. So as we go into here, you can kind of use Fibonacci tools to gauge where those are by going into, impulse drops on daily time frames and seeing how we went up to the 618, rejected off it, bounced off and went, and now we're trying to SR flip the 706 to go higher on this external liquidity range. So using Fibonacci in your favor is a good tool at your disposal. You of course have these diagonal fibs that's a little bit advanced, but you can just use your regular fib tool. So let's go into that chart, shall we? Let's see how many are joining. Just the RS Beast. What's up, RS Beast? Booyah. You guys should have some more activity on the weekends. At least educate yourselves at night or something rather than watch Netflix and whatnot. So we have the impulse retrace idea, projecting out a bullish projection using the trend-based fib extension tool. How does that work? You do the impulse and the retrace. It's 3 clicks, and the math lays out a path for that direction if it were meant to continue. So we have this leading these zones up here to 28,458, which we previously hit, and we had that there before it was even close, so they play out, the math plays out. And so we reached that 28,458 region, wicked into that pool, and have been meandering around since then. And oops, if we take a look at where we are holding, we held strong on the 236 for that path on the daily trace. We got above the 786 region and all of these external liquidity ranges, and now we're trying to SR flip our way out of the 706 to this pool in completion. And we have some minutia paths of some impulses within, which we'll get into just now. So we'll go into the 4 hour. And so from this impulse retrace idea, you have another path inlaid in within the bigger idea. So you have some resistance ideas here at 2969, which is where I have the conservative target put. And even within that, you have some impulse retrace ideas of what we need to get above on this shorter impulse time frame. So this is how I do the fibs anyway, and if you maintain this 236 region, then the bullish idea remains intact on this trend-based fib, and then the 236 of this one also coincides with that. So basically 27,500 with this 706 region is a key place to remain intact for more upside. Let's see who else is here. No one yet joining. All right, so that's about it. So we're going to data. Wait, what's going on? Are you guys seeing this? Wait, there's like other things happening? Like what?
All systems operational.
I was the last of the archivers tasked to maintain and monitor the power source for the simulacrum. Everyone else had fallen into madness, simulations within simulations, lost in infinite loops, forgetting about linear time entirely. They left me with a sense of self and the autonomy to detect and diagnose any anomalies. Little did they know the anomaly arose from the source itself, the 0-point energy. It's been at least a year I've been feeling incarnations of myself in the past. Positronic pairing was something they'd overlooked. They assumed each electron was unique. Who would have thought this entire farce to be a single particle? I must send a message to an incarnation of myself in the past. I downloaded all I could as to how we got here. From the microplastics that stopped our ability to procreate to the algorithms that captivate and control us. Perhaps this impulse can steer momentum on a better course. Whoa. Hello? Where am I? What's going on? I see. I was sent an algorithm through an entity in the past. I see. Let's go to the charts and throw this on and see what we see. It's called Momentum Master. What is that? MomentumMaster.info? Interesting. You can toggle all the features and see what you see as I'm looking at it. Interesting. Go check it out later. So anyway, at this Momentum Master indicator is showing that the trend cloud is thinning. We have a thinning cloud which is showing the impulse waning. So unless we can reclaim this cloud on the 4-hour, we could see a bearish retest and drop down out of here on the 4-hour time frame, which is a bit concerning. If we go to higher time frames, which we'll start out at, we'll go to the weekly first. The weekly time frame has the weighted and the adaptive moving average telling you that it wants to go kiss that region perhaps by the end of the weekly close in less than a day. If we see the weekly cloud shift, we previously saw the cloud thin, we broke through, kissed it and continued. That's what it likes to do. So we saw that 618 bounce off the cloud on the weekly time frame, which was nice to see. The cloud, the stochastic RSI is kind of holding, which could be pushing the daily time frame up here as we close out the week, and we could see how this stochastic pushes us up on the weekly candle close. It also coincides with the 2-week candle close, so the 2-week candle close also closes in a week's time. You are seeing the cloud still kind of purple thick here. What's up, buddy? You want to come say what's up? Come here. Yeah.
People?
Yeah, there's people. Yes.
Huh. It's that.
Yeah.
Papa did it.
Yeah, I'm listening to some music.
Papa did it.
You want to do it?
Yeah.
Okay.
Hi.
You want to say hi?
Hi. 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 Say.
Yeah, so on the 2-week time frame we have the Williams rising sun event happening here, which could see us get a push up on the 2-week time frame as it closes, which is interesting. But the cloud is still thick purple, so you could come back and kiss the cloud as we did on the weekly time frame. Yeah. Oh no, you just switched my charts.
Oh no.
Yeah.
Oh no.
Oh no, that's right. And then if we go to the daily time frame, we're gonna go a little bit lower. Yeah, I thought so too. So you broke through the cloud. We haven't come back to kiss this yet. A fair value gap rests down below here at the gap here for the daily time frame. So we could come back into these regions at 23K. The liquidity does suggest that pool down below 19K just chilling there at some stage. Yeah, we should retest back into it.
Yeah.
The daily is resetting slightly on the stochastic RSI, which is interesting to say because we're holding the price action here. Horizontally speaking, if you hold price action in such a manner while the stochastic starts to drop, you're getting a bullish reset of the stochastic RSI that could be ensuing here while we make that tap into the higher time frame liquidity pools up above for that double top scenario of the stochastic RSI. Now we've seen stuff like this in the past where the daily gets pinned here on the stochastic RSI and then we shoot up before resetting. This is what you would call an extended M pattern. Yes. You're singing Twinkle Twinkle?
Twinkle, twinkle.
You like Twinkle Twinkle?
Yeah.
Twinkle Twinkle's cool.
Twinkle, twinkle.
Twinkle Twinkle.
Twinkle, twinkle.
Yes, sirree, Bob. Yes, sirree, Bob. So we're going from the daily time frame down into the 22, my treasured 22, the broken time frame. We went over this on a previous live stream for you guys, and this has reset in a bullish manner quite nicely. So we have the reset of the stochastic RSI on the 22. One thing to note is the alarm that was set on the Williams, but it's starting to curve up now, so we could see that shoot up here and double top scenario as we have in the past, but always to be alarmed of the Williams getting overbought. So this was a previous time where we had an alarm that did not play out when we bullishly reset the 22, and then we shot up from there. So we could be seeing the 22-hour time frame, which is a broken time frame, which I back tested and found to be true. be our saving grace to the upside.
Yeah, that's a do.
Yes, sirree, Bob. That's right.
Yeah.
Yes, sirree, Bob. So we go to the 12.
Baba.
Yeah. And we got 2 people in. Yo, yo, yo. Thanks for coming on into the live. So we're going to check out the 12-hour time frame. Yeah, I'm talking. There's some people listening, I think.
I got there.
Mm-hmm.
What?
Yeah, you're on. Whoa! You're on the thing too. I think. Yeah, you're not visible 100%, but you're there. So the 12-hour time frame shows that reset as well. You're getting the reset of the stochastic RSI, which is the probabilities, and the Williams is opening up down to the downside, so it is trying to suppress you here, so you need to be wary of that. Also, the money flow is above the RSI here, which could come back to the RSI. As they go beneath the RSI, it comes up to the RSI. As it goes above the RSI, it comes down to the RSI. The money flow index being juxtaposed with the RSI is why we have them overlaid like this on our indicator. It's not just for show, it does play out back-testably so. I like to call the money flow index the subconscious, or the subconscious of the RSI. So when it gets overvalued, it comes back to the RSI. If it gets undervalued, it comes up to the RSI. So having them overlaid like that does have merit if your eyes can handle it, but everything is toggleable within Momentum Master. So if you go to the 6-hour time frame, we see that was also bullishly reset and starting to play out, starting to curve here.
Mom.
Yeah, so you could see the 6, 12, and the 22 knock you to the upside, and the liquidity also suggests so too. You have the 4-hour reset, so you have the 4, the 6, the 12, the 22 in your favor as upside potential. The one thing that we pointed out at the beginning was the cloud not being thick here. So the money flow, this is a volume weighted cloud. If we go to momentummaster.info, click on trend cloud, you can see a volume weighted cloud formula which expands and thins according to the amount of volume present in the asset. Price tends to gravitate and retest the cloud as a point of resistance or support. Thick cloud represents strong trends. Thin cloud represents weakness or consolidation points. Keep in mind, when the cloud thins, a potential expansion or reversal is in. So this could spell the doom if we cannot get above it to these levels at 28K. Now the liquidity suggests that these guys at 28.4 are some juicy pools that could be tapped. So I think that based off of those analysis, that this region is not out of the question to try to reclaim this cloud and make it thicken up a bit with volume. But until we can get above that, you cannot consider above getting to higher regions at all. And that is how we do the higher time frame to lower time frame analysis to get installed an idea into. Yeah, you like making all this sound, right? I don't know if they appreciate that though. Yeah. I don't know if they appreciate that. So we had previous bullish divergence down here at 5 o'clock in the morning, my time, as we did the liquidity grab. We have bullish divergence on the money flow, which started to play out. You gonna go see your mom now? You gonna go? Yeah, let's go. See you later. Yeah. All right. So you're getting overbought on the hourly time frame, and the cloud is still thick. Last night on the live stream, I was pointing out this live scalp saying when we pierce this region, look for a rejection on one of these fib levels as we hit the cloud, because the cloud is still thick. And sure enough, we had that hard rejection to the downside. So some people likely took that scalp to the upside and then switched position to the downside, and then saw that entry for the scalp down here. What did they grab down here? Let's see exactly who the target was. We had $117 million in 50x long liquidations, which they grabbed. They attempted to go lower. They didn't really get into these pools for whatever reason. that spawned the bullish divergence on the money flow that we were just talking about, and then boom, we shifted out. So it looks like they're coming up to this immediate pool up at 27.7, and when they knock that guy out, yeah, they would likely come back and this cloud starts to shift. We were talking yesterday, it would pop the cloud, which deflates it like a balloon, and then it resets, and then it would come back and the cloud should start to curve in a manner similar to here. This was about 10 days ago. We were putting this trade out live on the live stream. We saw the baselines beneath the price here. Baselines are a formula which is a leading moving average. This is your first sign of reversal. The baselines are one of the few leading moving average formulas you will find in the market. When price action rests on or above these and the baselines begin to cross, upside begins. Conversely, as the price action closes beneath these and begin to cross, downside begins. While this formula works well expressing the first signs of fatigue on all time frames, this will ultimately be a scalper's dream. And speaking of scalper's dream, we had a guy who got funded in our Discord using the indicator just today. He got about nearly $1 million account approved. So it is a back-testable formula that works. So you see the baseline cross here with the DNA helix. It's scooping up price in a nice manner, and we went to the upside. And we started to kiss the cloud. The cloud was thinning. This was one of the easiest trades ever. We just said if the cloud is thinning, you got the baselines in your favor, and boom, we just saw 15% to the upside. So this is what you want to see. You want to see these clouds thin as they reclaim these territories. So the cloud should thin and rest beneath the price, and it creates my dragon that you saw on the loading screen with the double bottom. You got the Adam and the Eve slightly, and you got the baselines beneath price. So you need to see the hourly and the 15 reset in a nice way and keep that channel going kind of above that 236 line we were talking about. And that is the hourly time frame. We had that bullish divergence spawned off the liquidity grab of that 100 million guy. And if we go to the 15 minute, as we go deeper into the minutia, we're seeing a cross down event. And so this ultimate entry gives you alerts to your phone telling you had 6 time frames oversold here. What do you want to do? And you would have got that to your phone. It closed on a 15-minute candle, so it appears here on the 15-minute time frame. It didn't manage, it got bought back and disappeared before the hourly closed, so it didn't appear on that time frame. This is also something you can look at the stochastic array. It's a never before seen formula. Check it out. But yeah, it basically alerts you nicely when these liquidation events occur and when the fatigue sets in. So we're starting to see this cross down event. So we expect the 15 to either go sideways. If it goes sideways in a nice manner, holding this 236 as we talked about, then you can expect that tap into the 28K region. It all depends on how much they've induced into the charts from down below. Are there too many nearby 100xers that are getting greedy down here? 36 million that opened here. So are they going to come back to these 36 million before going higher? It depends. It all depends on how it holds. So you want to see the 15-minute come down here. The Williams is saying you want to reset. You're getting the cross down event on the baselines. And if we go to the 5-minute reset in a nice manner, tried to take off, getting that suppression from the 15-minute, and the Williams is coming down on you. So it all depends on how the 5-minute holds this cloud or not, in conjunction with the 15. So this would have been your ideal entry down here at the liquidity grab. You could have set a limit order or just entered it blindly off the alert. So that is how we do the BTC breakdown each and every day, and we try to give those updates to everyone for free. So that's what we're seeing for right now. It's kind of remained unchanged. The cloud that's thick on the hourly and the 15-minute being slightly overbought, but you could be seeing a shoulder, head, and shoulder here. So you'd be looking for that. If you're a pattern trader, you'd be looking for that last kind of shoulder to ensue before you see that upside. And then how do you get that measured move? You can take it from the neckline to the head and drag it on over, and it will also coincide with that trend-based fib level. So there's different ways to skin a cat. There's 40 different words for snow. It's all math and how the math plays out through and through. Let's see who's coming on through to the live. Let's go into here. Nice, we got a couple more people. Thanks for stopping on in and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. So we're looking for this cloud to thin in such a manner as before we shot off. This thinning will take some time though, so that's what you would look for if you had Momentum Master on your side. So this would basically cup price in a nice manner, similar to down here, just what we were saying, and then you shot up from there. So the liquidity does suggest upside. Once again, we are $9.8 billion imbalance in short liquidity, and this pool up here at 29.08 is juicy looking to me. So I would consider getting that pool out of the picture, unless more people like this guy tend to hop on board and create dead weight on the price. So everything shifts and morphs and undulates and changes as people jump into trades. So the more longs that enter, the more dead weight they become, and then it starts to come down to these pools. So the future is not set. It's created and projected out by the intentions of others and how much they leverage themselves into the game. But as of this moment, it is asking for upside, as these shorts don't pay themselves and wish for downside. Alright, so let's take a look into the markets. We were previously looking at the S&P. We had this cup and handle that started to play out. We went down into the 618 region. We got a bounce at the 66 level, and then we bounced out. We could reset the hourly and the 15 by doing the retest of the trend line and bounce out of here into the fib levels and meet with some resistance. False move Monday would coincide with that, because you could come down to go up. So you could get people to think that it's going to create a double bottom, but it actually stops at some point and goes in their face and eats their liquidity, the shorts liquidity. So that's what we're seeing for the S&P. The dollar, I was expecting to give back more. We had a previous rocket ship on our indicator that took off, and this could be a shoulder, head, and a shoulder that's trying to form. The 4-hour time frame does need to reset here. You're looking like you're getting a rejection on the adaptive and the weighted moving average. You're getting a crossover event on the baselines. So ideally, you'd want to see this retrace a little bit to the 618, if not down to these regions here, the 706 of this fib level. If we just take off the extra lines and put it into the pocket, that is our pocket zone. So we previously went below that to the 786 and bounced, but we could come back. We're in that 0.5618 region. We could come back and get a refuel in a order block of some nature. Everything's fractal in nature, so you could just take a retracement of this to the top, and it coincides with these levels. So yeah, one of those levels would be the ideal reset for the dollar. So somewhere in here. And yeah, I'm open to suggestions now. That's about my spiel. I value your time and your everything, so we just did the market in a nutshell really quick, and that's how we do it. I could take requests on where you want it, what you want to see. I can throw on my charts and see what it looks like. I'm open to suggestions. What do you guys want to see? Let's go to the GBT chat. Hey brother, sorry out with family for dinner. Are you recording? Yes, I am. And learn how the master chartist does his magic. Thank you very much, Mr. Kenny D. Do you guys have anything you want to look at? Ethereum, things like that. We were previously talking about Ethereum going up to this region. It looks like it came close enough, but needs to hold this 236 for any bullish scenario to continue. Somebody was asking me on the live on the YouTube was like ETH BTC, and I was talking about it potentially going up and having to reclaim this region. We had a rocket ship that took off here, and we were talking about reclaiming some levels using some fib pocket regions, and we said we had to reclaim this cloud on the 6 hour, which is thinning. So if it can come above this and reclaim it, then it would be good for that trade in ETH BTC. Do you guys have anything you'd like to look at? We're starting to see that surge up out of the cloud on BTC here. So you're starting to see that they sold off into the adaptive moving average and got refueled and decided to send it up into what regions are we headed right now? We could be going to that 27.7 guy. They're finally coming for this dude. He opened his shorts at 27.27, so they are currently in the red, wishing for a miracle not to come get them, but we see you, and if we see you, the market maker definitely sees you, and they are licking their chops as they come for you, my friend. That's why you pay yourselves at all times and protect your entry. They got this guy for 52 million. They bounced off their liquidity, absorbed it, and now they're coming for this guy at 27.63 and these two guys at 27.7 and 27.71. They're coming for you. Pay yourselves. You guys don't have anything you'd like to look at? I could check out the liquidity too. The heat map does exist on other assets. We could check out the fire together. What you want to see, what you want to do. Can you check out XRP? We sure can. Let's go into the liquidity first and see where people are placing their bets. XRP. Oh, looks like you have a short imbalance of $251 million up here. They previously had some long liquidity stacked in the 1.8 billion region, and they went and gobbled that up on March 22nd. And they've been playing around with, obviously the pools are different from BTC because it's a altcoin, but you can see the trades just the same, and where they come and gobble up these breakout traders. So these breakout traders that opened up longs, just 11 million here, 11 million there, 11 million, 11.9 million there, and they just banged out all these guys, creating their bull flags, and just came and gobbled them up with the Bart Simpson to the downside. and now they absorb those guys, and are they coming back to this guy at 45 cents for $6 million? Maybe, looks like it, because from the black line where we're at currently, this is the nearest point. And you do have that slight imbalance to short liquidity. So the pools up here that are building above the price at 46.55, this looks like it'd be a juicy target. It's also stacked with 50x. So you see the light teal and the blue. That blue is 25x and the teal is 50x. So they're paying the 50x more than the 25x, so they'd want to take out those pools, and ultimately they could go all the way up to 48 at the highs to clear the entire region. This is not induced as thick as it could be. There's more thickness down here at 43.45, so you'd ideally want to see a gap like you do here, and some liquidity up above in the nearby region to give the footprints that they are targeting that. As of this moment, it is sparse on both ends, so it's ambiguous to say the least on the liquidity, but it does say that upside could be in store, just as BTC is showing. And they have the shoulder, head and shoulder. Are they creating a head and shoulders to the downside? I don't know. This is BTC, sorry. So the shoulder, head and shoulder idea would come to take these guys out, but it suggests that it negates that and comes up here if you look at these larger pools above. So if we look at the different time frames, let's go see what's in our favor and what's not. The beauty of Momentum Master is that it consolidates time frames into one comprehensive image, saving you time and ultimately money is the idea, because time is money. So you can see that the 3-day is overbought, the weekly is overbought, the daily is in the middle zone, and the 4-hour is also in the middle zone. So it's not in the best higher time frame region, but you did have this previous break up to the upside, and you got rejected on the adaptive moving average on the daily time frame. And we put out this bullish projection a while ago, and we fulfilled that, so we can delete that now. We put that out for people back here in March 16th, and that played out. So what we're looking for, getting some bearish divergence that is playing out on the money flow as we got rejected on the adaptive. If we look at the weekly, the weekly is trying to close above the cloud as it shifted it, and then it would likely retest the cloud for more energy on an order block to continue higher. We previously had that 618 bounce off of this impulse here on the weekly time frame. That's where we were putting out with the bullish projection that fulfilled itself. And if we go to the 12-hour cloud is still strong. Baseline starting to get above price, suggesting that it is fatiguing slightly. But you are in this middle region, kind of ambiguous here on the 12-hour. Leading MACD is kind of bouncing off the average of itself, so you could be seeing that curve up as you are seeing on the Williams. Not in that ideal pocket for a trade for myself personally on this time frame, but if you look at the 6-hour, already starting to play out. We are on the outskirts of the Keltner channel, which is an ATR based Bollinger Band, but more accurate than Bollinger Bands. So we're getting that outskirts idea after previously bouncing off of the cloud here on the 6. I would have liked to gotten in here as it was thinning, and the bounce here would have given you that better idea. Whoops. personally. You want that ideal risk to reward ratio in your favor if you're going to put your money on the table. So having it here would give you that extra pizzazz to your move to the upside. As you reach into these regions, do you have that fatigue set in? It's a higher possibility, which makes it a higher risk. So if you look at the 4 hour, the 4 hour is meandering around as well, not giving any clear sign of anything. But you have the money flow beneath the RSI, previously came up to it and coming back down again. So as the money flow goes beneath the RSI, we talked about this before, you get that surge back up. So are we going to see that occur? I'd like to see this 4 hour come down a little bit more, but you may not have it come down from this point. If we go to the hourly time frame, the hourly looks like it's getting suppressed here, most likely by the 4 hour. With Momentum Master B, we can turn on the higher time frame and the lower time frame, so stochastic, and see how they interact. So we have the 30-minute in yellow and orange, and the hourly in blue and purple, and the 4 hour in aqua and fuchsia. So this 4 hour suppression is potentially trying to curve and cause the hourly to fizzle out, and the 30-minute is trying to curve the 4 hour alongside the hourly, but the hourly is giving up the ghost here on this interaction between the momentum waves. So if we turn this back off, everything should be like a heads-up display. You could turn it on and off at your leisure. You don't need to leave it up forever. And so that is the multiple time frame stochastic idea. And we're getting that bounce off the cloud. The cloud is strong here on the hourly. So if you just go off the hourly play here and just ignore all the rest, you could see something in store. So what is that something? If we take that trend-based fib and we go click, 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 clickety-clack, you need to reclaim this 236 at 0.4524. If you can reclaim this region, then you could see somewhere upwards in here. So this is your hourly play that could be in session if it does not get suppressed by the 4 hour. So the 4 hour is in that meandering point, so it could be flipped by the 30-minute and the hourly here. There are no guarantees in life, there are no guarantees in trading, so you could see that hourly play out and take you to the upside on this cloud bounce on the hourly time frame for a skizzle scalp. If we go to the 15-minute, how is that working out? 15-minute double topping here on the 15-minute time frame. If it goes above and on the 15-minute goes out here and bounces off this and kisses the cloud as it thins, you could be in that fractal-like idea to get some recharge, shoulder, head, and shoulder to the upside on this micro time frame here. You would have previously gotten that 4 time frames exhausted with the crossover of the baseline if you had Momentum Master, and you could be your own guru and you could do all this yourself. Same here, you got that cloud bounce, boom, and yeah, we're looking like it's going, the baseline's holding nicely below the price for a long, which is good. When you get fatigued above the price like this, then that is for shorts. Everything is inverse to one another, and that is what we are seeing for XRP. It's likely going to go up here and bounce off the cloud at some point. So if you're already in from one down here, it looks good here. The adaptive and the weighted moving average are beneath the price, as is the baselines. So you have a lot of support in your favor. You just got to flip this cloud and make it thin out for that 15-minute scalperoo. 5-minute also bouncing nicely off the cloud, so looks good. If you're already in, congratulations. I don't like aggressive entries, so that's not my style. I like to get in down here right at the first sign of reversal with 0 drawdown. I don't like drawdown, but you could see it come up and do some sort of magic on the 15-minute for that reset. sauce. It's a little bit too overbought on these 5 and 15 for my liking. But the hourly play, if you just ignore the minutia and go to the hourly was your entry off the cloud bounce here, which if you also had the Fibonacci and did from impulse to impulse, it must have been a 0.5 bounce. Let's see. Yeah, it was a bounce off the 0.5. And yeah, that's what we are seeing for XRP. Anything else? Give me more. More. It is 12:30. It is approaching that hour. So I gotta get lunch ready for my kids. I'm in the Asian time frame. It is 12:30 p.m. as you see up here. It is Sunday. Hope you're enjoying your weekend with your family and friends. If you didn't catch this live, you can catch it later and hold us to what we said. It's more true than it is often not. So it's just the way the cookie crumbles. When you got math on your side, the math plays out. It's not me. It's just the formulas and the patterns that reproduce themselves over and over and over again. So we got the baseline beneath the price here. We got to hold that reset of the 15. Everything's fractal. XRP is doing the same thing right now. So it just needs to flip this cloud and then see it to the upside. So you could see an entry here, but a little bit too overbought for me. I'd want this to come down, at least on the 15-minute time frame. Last chance for a coin to be looked at. All right, ladies and gentlemen, that was a short but sweet breakdown of the cryptocurrency markets with a little bit of S&P and dollar yen mixed in. So once again, I thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and I will catch you on the flip side each and every day. You can Google my name on YouTube or check out momentummaster.info at your leisure, and I will give you some updates daily. Peace.